A tale of two markets, or shall I say, NVIDIA, AI, and then the rest of the world. Major separation here, folks. We'll discuss it, the implications. Traded down on a Friday, 28 handles. Don't know if we're going to get that old time closing high print today. Good thing we have Todd Gordon at 8:35 to give us his fundamental and technical outlook on the markets. Adobe, where did we hear about that stock maybe going up? Maybe Jay Woods on PreMarket Prep. RH in the trash. It's a Friday. We're really fired up on PreMarket Prep, so let's get things started.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, commodities and futures. We had a little bit of a rally. That failed. Down 28 handles, 40, 54, 10, 50. Buck strong again, clearing that 105 area, up 32 cents at 105.12. TLT flat here, 93.92. Well, unless that's an 8 o'clock print there. Crude up 40 cents at 79.02. Gold recovering after a bad day yesterday, up 29 bucks at 23.47. Silver, that's in the green, 26 cents at 29.32.5. Bitcoin futures, they're up $325 at 67,185. Want to bring in Triple D. Triple D, let's all take it easy on Triple D today. He is not in a fast market, but a little bit of a
depressed market.
Yeah, I don't want to call it a sad market, but down 3-0. Down. Let's just get it out of the way.
You're done. They've been in this spot before. 2 of the last 3 years, they fell apart in the last series. Colorado, they lost, or 2 of the last 4 years. They got swept by Winnipeg in the first round 4 years ago, and they lost. They got swept by Colorado in the conference finals 2 years ago. So they've been here before. They've always, when they've been down 3-0, they've always been swept. So I don't see anything else happening here. We have, just a summary of the series is the Oilers have actually been decent, but the goaltending is just too much. Bobrovsky's been unbelievable, and Skinner's not been good at all. So, you have the tale of two goaltenders, tale of two markets here, tale of two goaltenders. You have one goaltender that's saving everything, and you have another goaltender that's really making no big saves whatsoever, and then giving away the game last night. So that, they'll say, it's this, it's that. It's all goaltending. NHL is all goaltending. If you got it, you can win cups. If you don't got it, you have no chance to win cups. Skinner was decent in the Dallas series, but he has not been good in the finals here. That's the bottom line.
Okay, so we're going to move on. Let's bring on AB lurking in the background here. And I got one question for both of you guys. When will we be replaced by AI? Like, there will be no pre-market prep show.
Yeah.
There'll just be AI generated news and commentary. What do you see that? Will that be before robo-taxis and self-driving, or after?
I think it's coming sooner than it looks like here. The market is clearly telling us something. Let's just tell an overall story here. Because everybody who's been saying NVIDIA is in a bubble, and, all the other IWM and all these small caps are going to catch up. The catch-up trade's coming. The catch-up trade's coming. They're all wrong, folks. They're all dead wrong. Dead wrong. I think the bigger story coming here is that AI is for real. AI is going to change the world, and AI is going to cost a lot of people their jobs.
I think
AI is going to cost a lot of companies to go under. There is going to be winners, and there is going to be clear losers. The winners are very clear. NVIDIA. We're wrecked across the board today. NVIDIA is flat. This is NVIDIA's down day when it's down 5 cents. Everybody who's been calling this a bubble, everybody who's been saying sell your NVIDIA and buy your crappy small caps, they're all wrong. Wrong. Dan Nathan, wrong. Keep buying your value names. There's something happening here, bigger picture. And we clearly see when this is the issue. You can clearly see what has happened in the last 3 days. We get a light CPI print, a light PPI print. Bonds explode. The TLT is up here again today, Joel. I know you said in the opener, but that was an 8 o'clock print. The TLT is up another buck. So we have separation now happening with IWM and the TLT, and this is not good news. The bonds are telling you that there's some problems on the horizon. It's the safety trade happening here all of a sudden. And the problems aren't with NVIDIA and AI. The problem's with that we see other companies, Newcor warning today. We're starting to see other companies not performing well. We're starting to see a slowdown in a lot of industries here. Yesterday was just a fantastic example where you had 7 or 8 sectors trading in the red, yet the indices were still trying to hold green. Why? Because of technology. Why? Because we had Broadcom up 200 points. Why? Because AI is for real, folks. So I think we've got to be looking on pullbacks to be allocating more money to the AI companies and on rips and rallies, getting out of the crappy small cap because just are not participating. IWM is now down on the year. We get too awesome. That's the news they needed, man. Joel's gone. He just left. But that's the news they needed. The rant's long enough that I'm going to run the show myself. The news they needed was 2 days ago. Light CPI, light PPI yesterday. And what do? They give it all back and go.
That price action, Dennis, we talked about it. And we talked about it in the morning. And
Joel, I don't know what's going on with.
He's having some internet problems, but ADBE can come in here and talk about this. But do you see where I'm going? Like, Joel, I don't know. You keep popping in and popping off. So we never have internet problems.
I'm here for good.
All right, good.
I'm here for good. And what I was going to say was the reaction to that IWM number getting nowhere near the previous day's high. And the S&P's pulled off too. And then just showing weakness day. And now that's the end of the story. It's trading down again today. It's trading down again today. And you're getting news when stocks or a sector or something gets the news that it's supposed to get.
Yep.
And it does the opposite.
Yep.
You got a problem on your hands.
You got a big problem. That's 2,000 companies. So I think you've got to be allocating more money to the winners. The winners are clear. It's technology. So on pullbacks here, what I'm planning on doing in the long-term portfolio, I will eventually get a pullback in tech, but I will be selling more of this value crap and buying more of this technology good stuff because that is what is working. It is very clear. I think I don't know if this catch-up trade is ever going to happen because you know what's going to happen? They're going to start lowering rates because the economy, the broader economy, is going to slow down and they're going to need to do that. But all these other companies are going to be hurting here. So we get another earnings warning from another cyclical stock. And I mean, the cyclicals are telling us a different story here too because they're starting to underperform as well. There's so many stocks. Joel's having problems. There's so many stocks underperforming. Bring up Newcor here. Give us the news here, AB. Newcor, $200 in April. It's $150. This is supposed to be a bull market, yet Newcor just gave back 2 years of gains in the last 2 months, and nobody's talking about it. Nobody's talking about everything except AI. We have the tale of two markets here, and we've got to start paying attention to it. You can't just blindly buy anything because buying anything is definitely not working. What's the news on Newcor?
Yeah, so Newcor announced guidance for the second quarter. The company projects EPS of $2.20 to $2.30 versus the $2.99 estimate. So the market was essentially looking for a $3 EPS. They came in and said it's going to be closer to $2.20 or $2.30, which is significantly lower. And they cited decreased earnings in the steel mills segment. And if you go across the different, steel names, you go to X, United States Steel Corp, like none of these charts really look great. And I guess
Steel Dynamics.
We know why, right? Steel's not an AI play, at least not for now. Maybe they'll need it.
Maybe eventually, it can, but you're reaching. It's an economy call. When you're buying steel, you're saying the economy is robust and the economy is going to go into a huge expansion. Not what we're seeing. Commodity trade, not what we're seeing. Even oil prices, they went down. They've rallied recently here, but, like drifting down. And the oil stocks continue to make new lows, not even participating with the recent oil rally here. Tale of two markets. And maybe it's going to be, like eventually we're going to get lower rates and these stocks going to turn around. But I think at this point in time, we got to start just banking on lower rates to bail out all these crappy companies, because there's a lot of crappy ones in the IWM. So best thing I did was 2 months ago was sell some of my IWM, bought QQQs. I wish I would have sold all of the IWM and bought all the QQQ, because IWM, I'm down on that now. And QQQ, like I said, I'm up 13 or 14% in the last 2 months on that play. So I think we've just got to start allocating more money to technology, which sounds insane. It sounds crazy to me to be saying this, because technology's up so much and all these other sectors are trading 12 times earnings, 13 times earnings, 10 times earnings. They just get cheaper, folks. They get cheaper. Cheap stocks get cheaper for one reason, because they're just not doing well, and they're maybe not going to continue to do as well as we think they're going to do.
You know what's another factor too that you have to consider? Like, even if you're looking at some of these stocks like Nvidia or Apple after it's moving stuff, and you're thinking, oh man, like I don't want to get in here, but I don't want to stay in these crappy stocks that that you have. Well, there's an alternative, and that alternative is cash. And if the way things are going, I'm getting more, I've tried to stay on the stable for longer and stable, but we're starting to see things now where, like, these rates that you're being able to get on your money. I know inflation's coming down, so that maybe even looks 5, 6, 7%. That even looks better. If you're afraid to dip your toe in some of these high flyers that have been moving, but you're sitting on this stuff that's absolute crap and going down 5% a day, they get out, go to the bank. Well, not the banks aren't that good with it, but there's alternatives. There's a whole different dynamic going on in the market where there is an alternative. And now I think with, inflation coming down, I mean, why not? Why not take advantage? I mean, it all depends where you're at, where your investing horizon and everything. But instead of staying in these stocks, like I've had the Steel Dynamics for a long time, and I'm like, I'm ready to just puke it out. Like, I don't care. It went from 150 to 120 and 121.5. Yeah, well, I'm not selling 150, but I mean, I instead of watching it going down, especially you get a warning from Newcor. I mean, why not? Why not?
I'm ready to puke out all the non-tech stuff. I'm ready to puke it all out. I wish I didn't have any of it, and that's the truth. And I look at my portfolio and I've been murdering it. If I was all NASA, all Nvidia, and AMD, you can say hasn't done much, but we bought it at 95. It just overshot. I'm not concerned about AMD. I'm not concerned about Tesla. I'm not concerned about, what I'm concerned about is like the small piece of American Airlines I got. What I'm concerned about is the IWM. What I'm concerned about is all this value crap that continues to leak. It's death by 1,000 cuts on these stocks. And why is that? Why, when American Airlines making all this money? Well, because the slowdown that says, is actually starting to happen. And what's going to cause the slowdown even more? When people start losing their jobs because of AI. Just think about ChatGPT. How many jobs are you replacing? Like editorial jobs. Like, think about, you go like this and you just writes your essay for you. Think about your English majors that are all sitting there, editorial. That's a scary thing right now. Sorry, editors. And we have some at Benzinga. But it's a scary thing right now. I mean, when you've got AI that can write that better. What about your taxi cab drivers? They're all going to sit there. The medallions in New York were worth so much money. I mean, you can say robo-taxis are a thing of the future and it's never going to happen, but that's just putting your head down in the sand and not looking at what's around you. It's coming. Well, they're coming.
The one thing with
it's not a matter of if, it's a matter of when. Musk is saying, a year to two. Kathy's saying a year to two. It's probably 3 or 4 years that we're full on, robo-taxi in it, but it's coming. There's a lot of drivers going to lose jobs. What about robo semi trucks? What about truck drivers? Think about all the jobs that AI is actually going to cost. And then you've got to look at what industries I want to invest in and what industries I don't want to touch. Because the next 5 years is going to be mind-boggling. The winners and losers, this gap here that we're seeing, is going to be so large. There's going to be like, how is that company bankrupt in this economy? And you want to know why? Because they're not an AI. They're being eaten. Their lunch is being eaten by AI. It's going to happen.
The one thing with the, I mean, the drivers, the automated driving coming to take jobs, I have a feeling the trucking industry, the truckers of the world won't just, make that an easy transition. You'll
Nobody
have
will. Nobody will. And
Well,
and
I
I'm not
mean,
saying every trucker is gonna. Maybe maybe I'm reaching here, AB. But what I'm trying to do is give examples of. Do we think like even go to McDonald's? You go to McDonald's. How many minimum wage tellers are there in there now? They're all, you just order yourself on the thing. I go in there, there's one in McDonald's. There used to be like 10 of them. So, I mean, we've lost jobs there too. So, I think we're going to get to a point here where we start seeing why IWM is underperforming because it's full of smaller companies that probably maybe are going to be AI users and maybe some of them are going to save money. But some of these companies actually are going to have their lunch eaten by AI too. There's not all AI isn't going to let everybody all be winners. It's not going to happen. And people on the media want you to believe that. We're all going to be better for AI. A lot of people are going to be better for AI, and a lot of people are going to be worse off. The gap is going to separate even more. That's the hard truth.
Okay, let's go to a stock that had a big move that was talked about on PreMarket Prep yesterday morning. Jay Woods talking about Adobe. Give us the report. Let's analyze the price action because you know what we've seen in stocks that have been in downtrends and popped off good news.
Yep, I'll get the numbers up real quick, Joel. Let's get your charts up as well.
Okay.
So Adobe yesterday after the close for Q2 saw EPS come in at $4.48, beat the $4.39 estimate. Sales came in at $5.31 billion, beat the $5.29 billion estimate. Some strong guidance. The company talked about what other than their AI plans, which helped fuel some positive sentiment there. So either way, just a very strong quarter from Adobe. Like you had mentioned, Joel, the stock had been beaten up going into this report. So the bar was a little bit lower. And I mean, now we're set to open today above $5.25 a share. The last time we were at that price was back in March. So Adobe filling a gap here all the way back from March. If we are going to open here at around $525 a share.
So some thoughts here. One, they didn't announce a stock split, which they should have did because it's not going to give it back if they announce a stock split. But it's beaten up. Bar was low. Bag holders all over the place in this stock. Unlike AVGO, unlike NVIDIA, that this stock has been in a really big downtrend here. So it's a technology stock, and they're saying a lot of good things, and the stock is rallying as it should. The question is, do the bag holders overwhelm it, and does it start to leak these gains back? I think it does.
All right. I've done this a few times before, and then I haven't put like the time or the price or the date, and I regret it. So right now, this is where the stock is trading in the pre-market, folks. 527. And I remember I think I took it off CRM, but I remember doing the same thing in CRM, and it was trading way up in the pre-market off its earnings. It was like, I don't even know if it was filling the gap, but I took it off. But we're going to do this. This is going to be a permanent exercise here. The 527 in the pre-market. Right here, you're getting into this gap, and you're way off the pre-market high of 536.90, or excuse me, 537.38. So you're $10 off that. That's not a good sign. I think you're going to have to find a preliminary level ahead of that if you want to sell it. I maybe even be looking, whatever, 530. It seems to be the high, going back to some of the after hours. But I know we talked about the CRM fade. Same thing happened in Lulu. Look at Lululemon. Right back down. If you chase that on earnings day, boom, you're right back to where you
called
were.
that.
Yep.
It's very simple what we're calling. Stocks and downtrends, you're selling the rips. Stocks and uptrends, you're buying the dips. All the stocks that are in downtrends, and Adobe is in a downtrend, and it's a question mark. Is this an AI company or is AI company? We got some people in the chat talking AI could eat a little bit of their lunch too. I think I'm at the point like Adobe. I don't want a piece of this right now. I'm scared of the cloud stocks. I'm scared of the cloud. I'm scared of, obviously this is a lot of other things Adobe in it, but you can throw it into the category here. It's a big rep. it's a big gift, I think. I think the stock's still in a big downtrend here. I think when the stock opens at 9:30, institutional money managers will be happy to sell this and allocate to other places. So I think you're going to see sellers in here. And maybe I'm wrong. Not always right. Wish I was right 100% of the time. But this is the kind of stock in a downtrend that I would be selling the rip.
All right, let's stay in earnings land real quick. Go from Adobe to RH. Tale of two earnings reports, tale of two markets, tale of two goalies. We got lots of tails today.
That is the tale of two
Tail in
goalies.
between my legs.
Yeah.
So, restoration
Tale of Dennis very sad today because he gets to the finals and gets swept.
Yeah, well,
I'm already saying it. We get swept.
You know, I mean, I guess looking at it just at the stats of the game last night, they Edmonton had almost double the amount of shots as Florida. But when I was watching part of the game, I was like, man, you can't put this all on Skinner. Like the defense was in some bad positions, which I almost felt like maybe that'd make you feel a little bit better because if the teams were so equal, but then it was literally just the goalie. But it was like the way the defense was playing. I was like,
their defense is awesome. Barkov is awesome. Florida, full credit. This team knows how to defend like a championship team. They defend like a championship team.
They are a deeper team overall.
Full credit.
All right, let's go.
What about overall speed? I mean, Florida,
Edmonton's faster, but in the playoffs, it's all about defense. And you know what? Edmonton's Darnell Nurse has been terrible. Cody Ceci hasn't been good. Bouchard is like good offensively, and he's okay defensively. Ekholm is awesome. Broberg, the rookie's been pretty good. Kulak's really good. So, but then you look at the 6 on Florida, they're all good. They have no weak pairing. That's championship defense. So they can get by with average, with the forwards by committee, really. They don't have no superstar. Barkov is borderline superstar, but he's always hurt. And he's a Selke winner. He's just defensive forward. Best defensive forward maybe in the game. So, I mean, he's not going to go score you 40 goals or 50 goals. But man, is he good, defensively on everything. So the team is a championship team. We knew it was going to be a big hurdle. It's just like if you switched goalies, though, and put Bobrovsky on Edmonton and put Skinner on Florida, I think Edmonton sweeps them too. I think the goaltender is that different. I think it's that big of a difference. I mean, Skinner has an 890 save percentage in the playoffs. That's got to be one of the lowest save percentages for a goalie in the last 20 years this far in. So you could say it's a little bit on the defense, but last night when Skinner's handling the puck behind the net and misses it, and then they score in an open net, that's completely on the goaltender.
Yeah.
Completely on the goaltender. 100%. And Edmonton had all the momentum. They just scored to tie it 1-1, and then you know what deflating that is? I played hockey for years. When your goalie lets in a bad goal, the entire bench deflates. Momentum is killed. It's so underrated momentum. In hockey, you have momentum like nothing else. Basketball, football, momentum is in all sports. In hockey, it's even more important. So when you lose that momentum, you're done. Anyways, Bill's mad. Can't talk hockey. Can't talk sports. We're not stocks and jocks. Go talk.
I think it was my fault, wasn't it? Was it my fault?
Yeah, somebody mentioned that. Somebody did it. It was AP's fault.
Yeah, it's AP's fault.
Goalie Bob, he's the growth driver for Florida.
Long Bob calls.
Yep. All right, Restoration Hardware, at least formerly known as Restoration Hardware. I'm still going to call it that because I don't know what else RH would stand for. But EPS came in at negative 40 cents. Missed the loss of 12-cent estimate. Sales came in at $726 million. That actually beat the $724 million estimate. But then, they were just talking about demand growth, not as great as they thought it was going to be, and maybe some weaker guidance. And I mean, you're really seeing this thing get crushed, and that's 2 earnings reports in a row. I want to say for RH that it's just gotten tanked after the earnings. Again, this is your luxury furniture store retailer, not really painting a great picture for the for what's going on in that space.
This is a story of tales of two economies, 2 stocks, 2 different tales of 2 markets. RH is not in the good one, folks. Slowdown's happening. You're going to go buy that $10,000 couch? I'm not. I probably could afford it, but I'm not in this market, not in this, I just think you're losing a lot of lower grade buyers. So the expensive stuff, when economy is just booming, and it's killing it. And you can say certain pockets are killing it, but there's certain pockets not killing it. I think you've lost a lot of middle tier buyers for these kind of stores, and RH is not one. I mean, you can say, oh yeah, I'm going to buy the dip on this. This is not where you want to be putting your money. Not an AI play, selling really expensive stuff in the economy that's slowing down a little bit.
We do need a new couch, but I'm not going to mention going to RH. But here we
Prices
are.
Crazy there.
I know. There's, and I can't think of what the stock was yesterday. Totally unrelated. Who was it? Was it Dave and Buster's? You know, like they busted it, and then they had
They
some
just keep hitting
rallies. Yeah, there's momentum to the downside here. It keep coming into the last 2 days, so I'm just looking at this. I'll give you a range. Like if I was short, or I don't want to go long, but I would say, wow, man, this 237 to 240 area, man, it'd be nice to see if I could get some stock there. And then I look and I see the pre-market low 237 to 232. So you're $6 above that. We'll zig, we'll zag or whatever. But man, that was a great area, 240. That's the only thing. On the upside, I can't really give you a number because they come in off the open, they rip $4 or $5 or something, and you just have to have, if you're brave enough to buy the open, and just throw your offers out there, half and whole numbers, and see where you get lifted. And when you stop getting lifted, then it's going down. But that's the best I could give you. This stock traded down $34, 243.15.
This is not the hero market. It's not the market to come in and say the stock that goes down 15% is going to bounce right back, unless that stock is an AI play. It's not the hero market, folks. And we've seen this time and time again. Snowflake, they're still buying. Oh, it's a dip. It's going to come right back. Oh, Nancy bought it. So it's going to come right back because Nancy bought it. That was $180, folks. It's $125. Even in technology, it's the tale of two markets. Dave and Buster's, no, not even a sniff yesterday. Not even a sniff of a bounce. Signet Jewelers, we didn't even talk about it. Jewelry, no, I'd hold back, buying that new 20-year ring. I'm a little bit tight for money here right now. That anniversary 25, silver anniversary ring that I'm going to buy. Well, maybe you're going to hold off a little bit. We're just a little bit tight. Maybe we're going to just downgrade, not buy the $2,000 ring, maybe the $200 ring. Signet Jewelers, punished yesterday. Not the dips you're looking for. Just think about, the Jedi, Obi-Wan Kenobi. These are not the droids you're looking for. These are not the stocks you're looking for. RH, Play, Signet, no thank you.
I am so glad that you brought up Snowflake here, Dennis, because you see the question mark that I did on the upper right chart. That's the daily chart, right?
Yeah.
That's where this puppy was trading, all right? So then I go to back on my left side chart here. I went to 240, that 240 minute, that's a special 4-hour chart or whatever. And I go back, and on this day, May 22nd, on the day of earnings, that stock hit 184.27.
What a selling opportunity.
The high in the regular session that day, 168.80, opened at 168 and a quarter, hit 168.80, and you never even sniffed the 160 handle after that. 4 days later, you weren't sniffing the 150 handle. Another 4 days later, you weren't sniffing the 140 handle. And now we'll see what happens with the 130 handle. We're currently trading under that. So great. I'm really glad you brought up that.
This is
stuff.
really
830 numbers. Oh, wait, 830 numbers or anything, Dennis? Import, export data. I know you don't care, but I just don't want you to get in a worse mood.
No, I don't see anything. CNBC's in commercial even. They don't care about it whatsoever.
Okay, go ahead. What were you saying about Snowflake?
I was going to say Snowflake is kind of like the perfect storm. Call it the snowstorm if you want to try to remember it here. But you've got a technology company that was a darling and loved and, going to, change the world. And we didn't care about valuation because valuation doesn't matter when these companies are growing like crazy. You know when valuation starts to matter? When the growth starts to slow. And the growth for Snowflake is slowing down. And you know what else? Is that this is now all of a sudden not being seen as this super AI play, even though they're going to talk AI. And they're going to say, yeah, we got an NVIDIA deal and we're an AI company and stuff. The market's saying, no, you're cloud, and we don't know how cloud's going to work with AI, and we haven't really seen all this. We're just gonna sell for now. You don't want to see that when your stock is trading, and we'll give you the multiple on Snowflake here right now. You're paying
still
232 times forward earnings. So maybe it's going to grow that multiple. Maybe it's going to go, but the growth is slowing. And then you're trading 13 times sales. Well, we've been talking, for long, and NVIDIA's exploded, times sales. It's crazy, so you can't use that as a metric. But they also have a 75% profit margin. So, a little different story. But you got a company that's basically not making hardly any money at all. And you got a company trading with a nosebleed multiple. So it's trying to figure it out where this one belongs. Perfect storm. Growth investors are saying, well, the growth is slow and I don't want them. Value investors are saying 250 times earnings. Are you nuts? So you're seeing this huge gap where value is down here. Growth is up here. Growth says, I don't want it. The value guy says, I'll give you $50. I'll give you $40. Not saying it's going there, but that's what you're seeing is this death by 1,000 cuts because the growth guys are saying no and the value guys are saying, are you nuts? You never want to be in that spot. Sorry, Snowflake.
Yeah, just not a good story here for Snowflake right now, especially when, if you're even anywhere related in the AI space and you can't get some some pops here, that's probably not a great sign for the stock. And Snowflake, it's like this data cloud company, like you would assume that it'd be getting a lift at least at some point from all the AI talk, but it really hasn't been. And I used to be in Snowflake. I got out of it a while ago, and I'm glad I got out of that, and I haven't even thought about getting back in. All right, let's see. We got Todd Gordon coming on in a few minutes. We did have some analyst ratings. We had Piper Sandler upgrading Pinterest going into
this is an interesting one. Yeah.
Going into the social media space, and Pinterest not really doing much off this.
Pinterest upgraded today?
Yes.
Yeah. Upgraded it.
It's got to be some headline, another one.
Yeah, Piper Sandler upgraded it, and the stock is still trading down 3.2% pre-market. So moving in the opposite direction of that analyst coverage there. Pinterest, I mean, you go to other social media stocks, Snapchat trading lower too. So just probably not the best day to be throwing this upgrade out there.
Yeah, but down 3%. Are they hitting this off of, and it's a reiterate, so sorry, it's not I don't see the upgrade there that you're talking about. I see a Piper reiterates their overweight.
Reiteration, yeah.
Yeah, and reiterates, so folks, I'm master ratings. I've traded them for years. Reiterates overweight doesn't do much for the stock usually whatsoever. And a raging bull market, it might, not on a down day. Upgrade to overweight, that does something. Reiterates, like, okay, we're saying, hey, we're overweight. Hey, we're still overweight. It doesn't do nearly as much. So it's down, trading down with the overall market. RH hit this, you think? Is that a reach? Is that a reach to say that, restoration hardware, you got stuff everybody's pinning on, like I see my wife use Pinterest, he pins on, the fancy furniture.
I don't think that's a reach. That's a good point, Dennis.
I'm wondering, like, we're down significantly 3.26%, much more in the market. I wonder if RH is hitting this a little bit.
Because I think interior design and
I think so.
That stuff is like really big on Pinterest. I'm not a Pinterest user, but I think people like look at it for inspiration for, oh, that's a nice living room. I want my living room to look like that. And if no one's buying stuff at RH, that probably means that no one's buying. So on Pinterest, again, I'm not a user, so I can't really talk too much of it, but I believe that you like can click on something directly on Pinterest and then go buy it from there, and Pinterest gets a cut of that.
Yeah, so I think that's why we're down here, and obviously you automatically with RH you see Williams Sonoma going to be down, and it is. I don't really think of Pinterest there, but I think I think that's why maybe it's down. Maybe there's something else. Chat if there's something else, let us know. But I could see a relationship here where when you got RH getting smacked 13% down, that Pinterest go down a little bit on that.
Plan B in the chat saying that pins went down before RH. So all right, let's go ahead and
okay. Maybe there's something else there.
Yeah, I don't know. I didn't see any big headlines in Pro. Let me check. Let's go ahead and get to our guest of the day. We've got Inside Edge's Todd Gordon hanging out with us backstage. I see a signal that he's ready to go, and you guys know the drill. We're going to give Todd our special welcome and then bring him on Pre-Market Prep.
Todd Gordon, founder Inside Edge Capital, trading analysis and a 10-plus year contributor to Benzinga. Todd, how you doing today?
Wow, did I hit the 10-year mark? That's amazing.
Yeah. Todd,
I'm
something
sure I like balloons and stuff for you.
Yeah.
Well, it's not the exact day. So, like, certain things stick
Morning,
out in my
guys.
mind when guests, like the smart guests like you, say things. And we had a discussion not too long ago, and we were going the whole small cap, big cap, back and forth. And you said, who needs the small caps? There's a bunch of companies losing money that, like, who the hell needs them? Now, I don't know if you've been investing in them but I mean, what's playing out in the market right now, that statement could not be more true. Is it going to continue in that direction, or is there some hope for the small caps?
I don't know, and I don't want to be flippant with that answer. And I don't care. I do think we're kind of in a market where large cap who have access to competitive funding, they can go to the bond market and issue debt at whatever percent they can dictate based on the quality of their balance sheet is in a far better place. Especially, I do think we're in this next generation AI generative boom, and a lot of small cap companies who don't have the firepower or the expertise can't really get on board. And I think that's why we're seeing such a bifurcated market here. I mean, those small caps, if they want to borrow money, they got to go right to the bank, and they're looking at 5 or 6 or 7% rates, much like we are. I'm on margin in my personal trading account and long. I don't even want to tell you what I'm paying on that interest rate. It's ridiculous.
What are you long? What are you long? Tell us the stocks you're long, and tell us the winners and the losers. I always go through winners and losers because I know you got a loser or two in there too.
Oh, for sure. I mean, I just got, I've been trading a ton of Celsius, and we had some but I've been trading that thing since the 20s and 30s.
I know that.
That was a nasty sell-off. So Celsius got taken out. What do I have on my active ops portfolio off to the side? I've got Trade Desk. I just put Pinduoduo back on. HIMS. How do you not have HIMS? I mean, that stock is printing money. Great technical setup. Car Guru. I kind of like that one. The used car market. It's a little bit calmer way to play rather than Carvana. I put CrowdStrike on. Those earnings are just too good in a crazy space. I'm just reading you my positions in the active.
Yeah, I like this though.
NVIDIA, ONON, great shoe company, just crushed earnings. Spotify, and then an energy company, ETRM. So that's what I'm holding right now.
Okay, I gotta just all of these things have the same thing in common. I'm gonna give Todd the props here for it. These are stocks clearly in uptrends. These are stocks clearly that are outperforming the market. And where everybody else goes wrong, even myself sometimes included, is that you try to be a hero and you're trying to buy the RH, the stock that's down, or you're trying to buy, and it just isn't working. Be that hero, to be that contrarian, just isn't working. We remain that the winners get stronger and the losers get weaker. That market continues. Todd, every single stock you just mentioned, clear uptrends here.
I mean, there's few people that I respect. I mean, I respect everyone, but there's few people that I respect in this industry as much in terms of market knowledge as you guys. How do you explain to people, and maybe is this of your style, Dennis? I don't know that to be the case, but in a market that clearly has stocks that are beating earnings, raising guidance, increasing margins, and then you have other companies that are completely sideways, not doing anything. In consumer discretionary, it's a sector that is not performing anywhere near as well as technology is. Like, why would you try to pick the turnaround stock and be a hero and get the turnaround play when there are so many companies that are beating and raising and breaking new highs? And I'm generally asking, is that your style? And then how do we sort of convince people that maybe that's a harder way to make money in these markets?
The majority of people, especially outside the market, natural human tendency to bet on the underdog, to bet on the stock going to go back. I remember sitting in my college dorm room with my buddy, and I was into stocks back then. I was trading stocks. I had him a buddy. He doesn't know anything about stocks. Doesn't know anything about stocks. He's looking at the CNBC screen. And he's like, That one's down 10%, then you buy that one. Buy that one because that one's going to bounce right back. That's the mentality of like once you're outside the market, it's natural human tendency to bet on those. And as you become a stock trader, you've got to break those natural tendencies. One of my buddies, Chris Banny, who's such an excellent trader, he's like, I buy what's high and I sell it higher. And I mean, again, you can go right back, obviously.
I love that.
How to make money in stocks, going back to, Gil and obviously the team, but momentum is just, like this is just the way, going to the Star Wars Mandalorian, this is the way.
Right.
And if it's the other way, it's natural human tendencies to want to do it the other way. You got to break that. You got to break that out of you. I have to break it out of me. I'm 25 years into this, and I still wanted to. I still want to be here and say, I'm on the bottom. And you know what? When I on the bottom, it usually doesn't work out very well.
Yeah, I hear you. I mean, I look at RH. I'm looking at it screen through the monitor here. Like, I don't think I could look or find an uglier chart over the last 2 years on the weekly than RH. I mean, it's a great store. My wife spends too much money there, but
everybody's wife spends too much money. I banned my wife from there.
I mean, that's an ugly. I haven't looked at the fundamentals of that company, but that's an ugly chart, man. I mean, you go back to 2020, it hasn't gone anywhere in 2 years.
So your answer is just natural human tendency wants to do that. But here you are doing the exact opposite. I'm going to ask you this question, flip it to you. How do you like it's just scanners? You're just like, do you even get are you seasoned enough now that you're not even thinking about like trying to be a hero and call the bottom? Or do you try to be a hero still every once in a while and say, this is a good stock and I know it's in a downtrend, but I know it's going to turn around? Do you try to do those? Or is it like, no, this isn't meeting my parameters. This isn't a clear downtrend. I'm not going to be the hero. I'm just staying away.
Right. So two answers to that, and this is, I have an educational side as well as you guys do too. Time frame, trend is very personal to people. You have to define what the trend is to you and what works for your tolerance, your risk capital, your mentality, your time frame, you trading stock, you trading the options, tax consequences. Like, you have to define what the trend is to you. So when you say you're trading counter trend, everybody could have a different answer to that. So, I really, really do try to align myself with the trend. And then whatever my particular time frame is for trading, I swing trade a lot of stock and options, but I run longer term portfolios, obviously, for the wealth management business. So you define your predominant holding period, and then you go 1 or 2 time frames lower. You have a good fundamental story. You know where the stock is within its industry and sector rotation. And then you try to identify support on pullbacks with the technicals 1 or 2 time frames below your chosen time frame that works for the account or accounts that you're trading. So that's the way I do it.
Got it.
All right, we just got to get this one out of the way real quick. What are you flat Celsius?
I still hold it in the wealth management. Okay. In our short-term active accounts, I'm stopped out. It's an interesting story. There was a Nielsen report that came out. There was an influencer out there who's buddies with Dana White, who's saying there's some crap in there, and it turned out to not be true. There's a slowdown in revenue, and the stock got hit hard. I am not opposed to getting back in it. This stock, generally in between earnings, will sell off real hard because it's running a huge valuation. And then a week or two ahead of earnings, people are like, this thing's probably going to beat. And then they run it up into earnings and then they sell it off. So, it could be in that period, and we'll see. This is their summer season. I still believe in the growth prospects. I still think that the company's firing. So there's a good example where I'll try to find support on the pullback, which I'm not yet settled in on. If I can find support 1 or 2 time frames below my holding period, I'll go to work and have risk management, enacted. And if it breaks, I'm out.
At what point in time, like you say you're stopped out on the momentum, so I'm just curious, because trading is, a lot about, good setups and making money, but it's a lot about risk management. And, the best traders do stop themselves out of stuff, and they get out when the trade's not working. So let's talk about this when it was in your other portfolio, not your wealth portfolio, but in your trading portfolio here. At what point do you say, well, the momentum's broken here and I need to get out? Where do you get it stopped on something like Celsius?
Well, this is, I'm kind of in the closet on this one, guys. It's like, I'm not offending or trying to be offensive to anyone. It's like, don't ask, don't tell. I'm an Elliott Wave guy. If you're asking specific,
We know that. We know that.
I know.
Yeah.
I love it. It's forever a part of me. People, it gets a bad rep, but in terms of pattern recognition and understanding where validation and invalidation is, turning points, like that's what I'm using, Dennis. Am I answering a question? Or am I going off topic?
Yeah. Keep going. I like this. Yeah.
So, I always know, top-down approach. We always know where, global macro is, what equities, fixed income, commodities, currencies, how that's all playing together in the sandbox. Then, I have a Elliott Wave outlook long-term on the indexes, S&P, NAS, Russell, Dow. Then I find, what sectors are leading. Sector rotation is so important here. Between the 11 sectors that make up the American economy. Then we go and scan within the industries, find the best fundamental stocks that are leading the respective industry sectors, then go to work on the technicals and fundamentals of those stocks, and then decide if we hold them or not. So it's very much a top-down approach. And technicals of the index and technicals of the individual stocks are very important. So we combine technicals and fundamentals. So
that got you in there. What got you out? What got you out of Celsius? What you said you stopped out. Where did you stop out? Tell us, if you don't mind, tell us the price and why.
We got stopped out at about 65. I have to go back.
So recently.
Yeah. So excuse me. Sorry. No, it's a better one. My old personal different. We actually got out at 78, 75.
Well, that's a good sell.
Baby.
Wow. Was it after that big candle? You just don't like that big
was.
red whoosh candle and say, "Woo, something's wrong here."
Exactly. We broke support. I have a few different accounts that I
like
hold
this.
So my official for trading analysis, we're out at 78, 75 on May 28th. So that was our stop out point in Celsius.
Yeah.
And I can show you the chart. It's an absolute mess.
Do you ever sell into strength, Todd? Do you ever sell into strength? Like, if you hit like a 5 super wave up or something like that, or do you just try and stay into trades? And the other thing I wanted to ask you is, and I've known communicating with you over the years, you're big on month-end analysis, right? Like you try and ride things out for the asset allocation models and stuff and look at it, or are you more frequent than that because when you're doing the longer term trades, there's other factors you have to take into consideration. So just wanted to throw those two at you.
Yeah, what a good question, and I'm interested in your both your responses too.
I love Todd. He always interviews us when he comes on. He actually interviews us. He's such a good guest. He's such a good guest. I love Todd.
Appreciate that. And I do want to know your answer. I'm not trying to play to the room or anything, but I think that's one of my shortcomings. Maybe, I've learned over the years that, I think the best money is made by waiting and sitting. So I think on the whole, for better, for worse, generally take myself out of big winning positions on pullbacks, as a stop trail up, and I get knocked out on weakness rather than trying to top tick into strength. I am super bullish in here. I mean, we could talk big picture. I think the macro environment is lining up, despite everything they said that was going to happen to us with 5% persistent 5% rates. Earnings continue to be amazing on companies that are leading. Breadth is extremely anemic. I get it. But I think we are in the next tech run that is maybe the early 80s. I've got some akin to, maybe the 82 IBM breakout is where we are. We could be, so I'm generally going to try to stick with what's working. And I think, this build out could take 5 to 10 years, and there could be some significant money that we all can make, life-changing money. And I am not a table pounding bull. I'm a trader like you guys. I've made, really good money on the downside in the GFC, and that's how I broke out, left the hedge fund and retail brokerage, and, went on my own. I like trading volatility. We're active management, wealth management, where, I bring it. I can go to cash in my wealth management business in 2 hours and be net short.
That's amazing.
Yeah, I mean, that's the way we're structured, and our clients know that. But I don't think so. I think we're breaking out now. I get it. The rotation, the breadth, the participation is really weak. Consumer discretionary, looking at RH, that's so encapsulates and highlights the point that, yeah, the consumer is struggling in here with persistent inflation and rates, and maybe they're just paring back. I don't know, but between XLY and XLK, there's a big gap.
Is there going to be, eventually like the rising tide lifts all ships and all these other stocks eventually pick it up? Or does this gap just continue to remain or even get wider? Because I argued this morning that this gap could actually get wider, and it would punish so many people that are like, yeah, small caps, you got to buy these no-brainers, 12 times, earnings, S&P's 20 times earnings. Why are you paying all that? Eventually small caps outperform. But maybe if I was arguing this, if AI really is going to change the world, and I think it is, it's going to change some companies for the better, but some companies for the worse. And
Absolutely.
maybe that's a lot of these small caps. Maybe this gap actually doesn't close. Maybe it just gets wider.
I mean, did you guys see one chart I'd like to show, if you don't mind?
Go right ahead. We love your charts.
Growth value to that point. Like, I watch a super long-term growth value relationship on the ratio. Let me just see if I have it up. Can I grab the screen? You guys mind?
Yeah, grab.
No. We just have all our handsome mugs up right now.
Yeah, I'm done looking at myself.
Oh no, yeah, Dad. Nothing
right.
Dennis there.
Right.
Dennis is having a bad day.
Mad that the Oilers lost.
Don't talk hockey, Todd.
Don't talk sports.
Hockey, okay?
I'm
No
sorry.
sports. Even though I think about it constantly. No sports. No sports. No sports.
Okay, so growth value. So this is just the Vanguard. I think it's V.
What a chart that tells you everything. Look at that separation.
No. Well, okay. No. Wait. Okay.
Am I reading it right?
All right. What are you laughing at me or with me?
No,
I'm
because
with you, but I love the chart. I'm like,
because we talk about this, but we're
here?
not as smart as you to be able to illustrate it like this. I mean,
I'm not smart. I just like to play with colors and pictures. I mean, just keep it.
That looks very much like a clear downtrend here that isn't breaking any. It's going lower.
It's going lower. So this is. Oh, come here. Don't freak out on me. Optum is challenging to use in real time. So this is value growth, right? And the reason I did value growth ratio, this is VTV VUG ratio. So putting value over growth because it shows there's a pretty good correlation with the downtrend in U.S. 10-year yields. And we're going back to, this is 2004. So, here's the low in 2020, and then there's the big 2022 inflationary spike as rates in orange ripped, and then markets rotated into value out of growth. And then we kind of sat back here in 2023 last year. And then growth said, screw you, I'm going right back at it. Despite rates making another push, we just made a lower high in rates. And look what value growth just did. We just broke a 3-year triple bottom in value growth, despite rates being so much higher. And that whole valuation conversation, do you want to hold companies that are 40, 50, 60 times earnings with 5% yield? I think the question the market's voting is, the answer is now yes, because the earnings growth that we're seeing, not to name the most obvious stock, but the earnings growth we're seeing is just bonkers right now. So that's a serious break in the value growth ratio. And of course, you flip it upside down, growth value, put it over 10-year treasury futures. It's the same thing.
It doesn't look like I want to be coming in and buying value stocks and selling growth stocks when I see a breakdown happening here. And especially like what I was arguing earlier, you get a light CPI number, light PPI number. This is supposed to start going the other way on this data, and it's not happening. It's
crazy. I mean, 1/10 below expectations on CPI, and the PPI was that one has been moving the market a little bit more than CPI. I don't know.
Yeah, and it was good.
It was crazy good. The yield curve is a problem, right? And this is a real problem for me, and I don't know how to answer it. And I'm reaching out to the smartest people that I know. The inversion is real, and what happens is as the data, the pricing data comes in weak, what happens is they buy up the long end of they buy 10s and 30-year treasuries, pushing the yield down. Well, the yield on the 10-year is dropping faster than what they're pricing in terms of Fed cutting, which is further inverting the yield curve. I think it's close to 44 basis points on the nominal. So longest inversion ever, blah, blah, blah. And the more they sell off rates, the further inverted this curve becomes. And I still think we're going to have to answer to that. The only, I'm having an argument with myself, but if you look at the real yield curve, right? Inflation factored in 10 years out, expected inflation 10 years out, and expected inflation 2 years out. The real yield curve is only 22 basis points of inversion. So, it's better, but it's not as bad as the nominal. So, just what if we're going to continue to sell U.S. 10-year yields off and they're going to bid up tech, okay, great, and growth, but we need a low at some point in yields. And I would actually prefer to see the 10-year yield pop back into the, sorry, that scales off, back into the, 4.4, 4.5, and just keep us a little close to where the 2-year treasury is, which reflects, where Fed policy is. So that's my concern, guys.
Todd, I mean, right now, when you look at the, Mag 7, we're really looking at like the Mag 3. You've got NVIDIA, you've got, Google's been doing well. Apple, of course, broke out this week, Microsoft. But are the Amazons, the Netflixes of the world going to catch up? Or do you think people are a little bit wary of buying those big names at this valuation?
I think Netflix looks great. What is that? Probably trading 40, 50 times next year's earnings. Amazon, I think, is just waiting to break out.
I think so too.
Amazon just looks too good. I mean,
yeah, I think about adding the. I hate adding the winners, like because my cost base on Amazon is $100, but I almost feel like again, trading is different than investing too, Todd. But my cost base is pretty low here on Amazon. It seems like when I raise my cost base, it's always the wrong move when I add to winners. But it's just me. I never add to losers either, though. I just don't add. I'm like in or I'm out. I'm just that kind of trader. Yeah.
For your longer term stuff, you won't add to
trading and investing. I'm like in and I'm out. I'm like, it's like, remember Karate Kid, Mr. Miyagi, karate do. Yes, karate don't. No, karate kinda. Squish. Like frog across the road. Squish. So yes. I'm kind of like, I'm stock in or I'm stock out. I do a half size position. Joel knows when I do this. Whenever I put in a half size position, I'm almost always wrong because it means I'm not convicted enough. So just stay away. Like, why swing? I'm going to kind of swing, it's a little bit of the dirt, but I'm going to go for it anyways. And like, no, I'm going to go half swing on it. And then you try, bunting, and you don't get on base. So, anyways, Todd. So that's what I'm like, in or out.
I mean, what Amazon's trading 38 times, right now. I mean, is that ridiculous? I don't think that's absurd right now. I mean, Adobe.
It's probably as cheap as it's been.
So
I used to be like 100 times.
Actually, I can tell.
You got a history of that?
I'm on the other computer, unfortunately.
Where do you use for that? What do you use for tracking equals?
Shoot,
that's cool.
I've got it right here. How can I get it to you?
Send it to me. Email it to Joel. We'll show it. That's cool.
You know what? I'll put it on Twitter as soon as we're off.
Yeah, do that.
So, NVIDIA. I can't stop thinking about it. Amazon was 125 times earnings in 2020. It dropped down to 58, 56 times earnings, which was the base through 2023. The Q4 23, it dropped down to 48. And now here we are at the lowest in over 5 or 6 years for valuation in Amazon. And Amazon, it's right on the peak, about to break out. I mean, talk about a company that's on the edge of the consumer and the technology area. It's there.
Todd, before I let you go, I would kept you super overtime here. I really appreciate it.
Can I say one more thing?
Sure.
Do you guys mind? No. Look at this. 2019 Mag 7 compared to the S&P and Nasdaq. Let it. 2020. Let it. 2021, let it. What about in 2022? Did Mag 7 get any credit for keeping the market lower because it let it on the downside? It's like crude. It's like, remember when they were vilifying the speculators because they're running crude up? You're like, well, why weren't you there giving us credits when we were shorting the hell out of crude and driving it to the downside? So it's like, it's just the way the large caps work in the market. I just wanted to show you guys that.
Okay. The last thing, and you put up some other topics that I wish we had more time to get to. But right now, there's just such the focus on the Fed. There's such the focus on interest rates. And I think me and you, we've been going back and forth with this. And, when we got together on the Wednesdays and stuff, and we're like, well, let's just stay here. That's
what's happening for sure.
Yeah. And I think that's good I think that's better for the market than them having the lower rates.
Well, that's what I'm saying. Like, I would prefer the 10-year yield to not drop 4.25. Like, hang in. And if the companies can continue to print profits and make profits like they are in this 4.5%, 5% interest rate environment, like me as an investor, the real yield with inflation running 2.5%, 3%, real yields 2%. Companies are still borrowing at net 2%. It's no different than it was 4 years ago, when inflation was 0 and costs were 2%. If companies continue to make money and the Fed has bullets to lower policy rate when the next shoe drops, like that gives me more confidence to go and expect, especially if we continue to beat earnings. So I like it. It could be quiet over the next couple months. Like earnings are out of the way. We got to wait for Q3 earnings. Fed wants 1 or 2 cuts, maybe 1 cut. And then the election is going to be a malaise, obviously. So could be quiet here for the summer as we get ready for the madness that's going to ensue.
And you could coach your son's baseball games and send them from third when you probably shouldn't.
We got a lot of gravel games Sunday. So
okay. All right. Todd Gordon, founder of Inside X, also technicalanalysis.com, giving us a fundamental technical.
If I owned technicalanalysis.com, I'd be worth about $50 million, Joel.
Oh, okay.
Trading analysis.
Okay. So
trading analysis is still pretty good too.
Yeah,
that's a good URL. Joel and I'll buy that for me. We'll talk.
Yeah. Who's got technicalanalysis.com? That's a good URL.
Yeah. That one.
Okay.
Right Trading's got stocktrading.com. That's like just enormous.
That's a
stocktrading.com. That's a good one.
That's a bright site. Okay. All right. We're going off the rails here. We forgot about AB. Todd,
I got to go too.
Yeah. Real quick, we're trying to get. I'm going to see if we can get halfway back on the session. Really nothing there. 54.20. If we get a super good roaring rally going, maybe get back to unchanged. I don't know. Kind of feeling like the range is in for the day. We'll see. We don't have. We have.
I gotta hop. I got concrete guys here. I got driveway guys. I got all kinds of stuff going on.
Get out
of
here.
Have a good weekend, guys.
Market.
You do.
All right.
All right.
Guest for Monday, Craig Johnson will be joining us. Piper Sandler. I know he was looking for a little bit of a correction last time around. We haven't gotten it. We'll see if he still has that in the cards. AB, anything else that you want to add today?
No, going back to our earlier conversation about AI coming for some jobs, there was something I saw on Twitter that I really liked. And this is from an author. She writes like fantasy books and stuff like that. And she tweeted, she said, I want AI, or let me find the exact quote because I don't want to butcher it.
Sure.
She said, I want AI to do my laundry and dishes so that I can do art and writing, not for AI to do my art and writing so that I can do my laundry and dishes. And I thought that was pretty good. I would rather see AI come in and do some of these things around the house that we don't want to do and stuff. Like, I like writing my articles for Benzinga. I like doing this show. I don't want AI to come for that stuff. I wanted to help out with the other stuff so we have more time for this. That was just the last thing, that I was like, I think that's a good thought. And I think, but we might potentially see some, regulation and stuff if AI really does start coming for a lot of our jobs. So I just wanted to add that to our conversation from earlier. That was it. And then outside of that, I think everyone just, enjoy the weekend. Have a great day trading today. Looks like the market might not be as hot as it's been the past few days, but we'll see what happens. All right, guys. Well, we will we'll go ahead and wrap up the show today. When a few minutes over, we do have live trading starting up right now. And then, of course, as Joel mentioned, Craig Johnson on Monday. Make sure to tune in 8 a.m. We will be here. Have a great weekend, everyone. See you guys then.